Okay, so let's make a full breakdown of the situation that we currently have on gold. Now, let's start from the monthly time frame. Now, on the monthly, as we have said in our previous analysis, we have a market that has created a huge impulse to the upside, creating all-time highs, breaking above the structure high that we had here in 2011. And now the market has created all-time highs. And after this, what do you expect? You expect a retracement, which is exactly what the market is currently doing. Going down on the weekly time frame, we can see that the retracement is pretty massive. The market just melted to the downside this week very, very aggressively. Specifically, if we go down on the daily time frame, we can see that the market broke below a quite strong structure level very easily without showing any sign of bullishness when the market actually hit the zone. It just melted through the area without showing any sign of bullishness, which is definitely great. In fact, now that this level here is broken to the downside, this is now previous structure support at this area, which is now turned resistance inside of this zone. And if the market will go for a retest of the area, we can definitely expect a deeper retracement. Specifically, it would be great to see the market this week, so tomorrow, make a little bit more of a move to the upside to basically create a candle that has a wick which is the same size of the body. Now, when you see a candle that has a wick that is the same size of the body, specifically on the weekly time frame, you definitely expect the next candle to fill in the wick. Now, at the moment, we still don't have any confirmation for that, but if we will see it, then this will be a very interesting setup. Now, going down on the daily time frame, as I was saying, we have the clear impulse, and now we are starting to see the retracement that, as we said, from a weekly perspective, we would like to see the market create a little bit a deeper retracement. Now, if we want informations on the retracement, what do we have to do? We have to take our Fibonacci from the high to the low of the impulse, and we can see that the Fibonacci level that is aligning the best with this structure is the 50% retracement. So we can definitely expect the market to go for a test of the 50%, possibly a spike to the 0.618 before trying to start the next impulse to the downside. Now, when it comes to the COT data on gold, so basically how the biggest banks and institutions are currently positioned in the gold market, we can see that the shorts have been increasing with the last reports, making a pullback quite likely, because if institutions are starting to short in a bullish market, you definitely expect a pullback to come, which is definitely what we were seeing. In fact, net positions were decreasing from 266K to 238K. So now that the market has given us this pullback, how we will be approaching this situation with students. Now, as I said, if on the weekly we will see the candle, which we expect the next one to fill in the wick, and the market will retrace back inside of this area, then this will be a good zone to be looking for potential trading opportunities. In fact, what we will be doing inside of this zone, we will be monitoring price action on the 4-hour time frame with students, waiting for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities for the move to the downside and completion of this impulse correction and impulse pattern to the downside, and for the market to actually give us a deeper retracement. Now, if you enjoyed this free analysis and education, make sure you drop a like and a comment. It really does support the creation of more free education and analysis for all of you, and I will see you in the next video.